Everyone, and on behalf of my co-chair of ACC India Corporate Council Forum, Rajesh and Smita, welcome you all to our power-packed virtual session of ACC India chapter on Fintech. Fintech in India has been one of the most disruptive markets for many years and has been increasing during the pandemic year with many Fintech players entering into the market in India. At 52%, India ranks second only to China's 69% in terms of global fintech adoption rate. It is reported that India has the opportunity of a digital payment market of $1 trillion and recorded nearly 35 billion digital payments in the year 2019-20. India far exceeds the global rate, raising ahead of developed markets like the US, UK, and Singapore. India is such a large and dynamic market, and with one of the few jurisdictions with a specific payment and settlement law to provide for regulation and supervision of payments and settlement system in India. With this background, I would like to introduce our moderator of the panel, Juan Costantini. He is the General Counsel of Vesta Corporation, joining from the West Coast in US, which is a leader in guaranteed fraud protection and e-commerce payment solution with, operating more than 25 years. Our speakers for today's sessions are Mikita Goyal, who is the Director and Regional Privacy Officer of PayU. PayU is the leading online payment service provider in 18 high-growth markets with 250 plus payment methods and PCI certified platform. Our next speaker is Vinay Kesri, who is the General Counsel of Setu, which is one of the fintech startup in India. It is currently serving APIs for payment, lending, fixed deposit, WhatsApp, and data sharing. Our next speaker is Manjunath Ambale, who is the Group General Counsel for Vault, a Singapore fintech company and crypto platform, and has 15 years of experience and was previously General Counsel for Razorpay. With this, I will now request Juan to please take it over.
Thank you very much, Kavita. Very kind of you for taking over the introductions. Hello, everyone. Welcome. I'm sure you're all as excited as I am to hear from the experts on the matter and get to then interact and ask the questions or bring in your own knowledge to the meeting. So I would like to again extend my appreciation to the Association of Corporate Counsel. Brendan, thank you for organizing this with Kavita, everyone else involved in organizing the meeting, and all of you for attending, taking the time to join us today. We have a very interesting panel. We have people who are obviously the hands-on experts on these matters. And as Kavita was just saying, India as a market for fintech is highly disruptive. It's in constant flux. And I was not too long ago, a week ago, in a meeting with the CEO of a big fintech here in the States. And one of the things he was bemoaning is, why are we falling behind in the United States in terms of development, in terms of innovation, in terms of being ahead of the curve when it comes to fintech? And the first answer that came to mind was, well, the US is a stagnant market compared to other emerging markets and to larger economies in terms of needs for financial services that the banks cannot cover, and fintechs have been very, very fast to jump to the task and find creative solutions. So obviously it's a very interesting subject, and I will ask then Mikita to please go ahead and start with your presentation.
Thank you, Brendan. First of all, I would like to extend my thanks to ACC for organizing this. Welcome everybody. So I'll basically start with I'm a payments lawyer. I'm a fintech lawyer. And when it comes to payments, it's the Reserve Bank of India who's the primary regulator. Everything kind of flows down from the Reserve Bank. I will start with, some bit of a regulatory background to set the context, and then, we can take it forward. From a regulation perspective, from where it all started actually. The reserve, this was the payments in India. They were being done without a regulation in place. Normal banking channels, things evolved. Aggregators starting pitching in between, wherein money on behalf of the merchants, and then settling it, making it convenient for the merchant to collect payments. When in 2007, the Payments and Settlement Systems Act came in, they formally introduced the concept of payment systems, wherein the licensing requirement was for the payment systems, and only the banks could act as payment systems, who could link to the card schemes and could operate. Parallelly, the concept of payment aggregation was also evolving, wherein there was a middleman in between who was connecting these payment systems to an end merchant. So basically like a tech platform who was handling funds as well for the players. But there were, its own issues. Settlements were delayed. Everything was kept in a current account. I'm not sure. I haven't heard about frauds, but that's what the understanding was at that point of time. That because of the issues which were being faced by the merchants, the Reserve Bank came with these guidelines in 2009, which are quite popularly known as the nodal guidelines, which kind of mandates all the banks to keep their it's a T+2, it's the settlement timeline, which prescribes a settlement timeline for any intermediary to store the funds or to keep the funds on behalf of the merchant. So it's a contractual obligation. Now with and the entire industry was working on the contractual on the nodal guidelines. Thereafter, things were evolving. New and new payment aggregators came in, like PayU is one of the aggregators we've heard about. Razorpay came in, BillDesk is one of the major players. So aggregators, aggregators are actually, they were the initial fintech players, wherein they were bringing in the technology plus, handling the funds simultaneously. Now on these tech platforms, while these platforms were evolving, the Reserve Bank, I would say they are very, very active regulator in terms of, understanding the situation and kind of, reacting to it or having a regulation around it. They came up with the payment aggregation guidelines in 2020. So earlier it was just the nodal guidelines, basis which the payment aggregators were operating. Thereafter, looking at the role of the payment aggregators, the way it evolved over a period of time and the kind of funds they were handling, RBI started understanding the concept, and they finally decided to regulate the payment aggregators, and there were guidelines on the payment aggregators in 2020. While on the payment aggregation side, this was developing, RBI it came up with new concepts, with new payment systems. One of the popular one is the prepaid payment instruments. So these guidelines came in 2014, wherein RBI introduced the concept of wallets. Minimum KYC, full KYC basis, just like basis a PAN card authentication, you can register a wallet or do a full KYC and then register a wallet. Introducing these new concepts of digital payments in India, and all of us has seen, people in India when the demonetization happened in 2016, how the wallet business has increased. Our digital payments overall have increased during the time frame. So along with these PPIs, there was another concept which was introduced by RBI, which I would say is also a new innovative way of handling things, and it was the Bharat Bill Payment Operating Unit, wherein RBI introduced a platform. And this was NPCI, the National Payments Council of India, which was constituted, and they started building, this platform. Authorization for the same is still from RBI, but it is managed by NPCI end to end. So NPCI came in, RBI introduced BBPOU as a platform, which is a platform for all the billers to register on the platform. And as a user, some of us may be experiencing just one app. You have one app in your phone and you can pay any of your recharges, your utility, anything, through one app. So that's the common platform which RBI introduced and provided for an authorization for the same. The work is still on. They are developing, making amendments. So it's like, they've been working throughout, understanding concepts and kind of, bringing in the regulations around it, specifically getting into the payment aggregation guidelines, which came in 2020. These guidelines kind of mandates all the payment aggregators. So they kind of introduced two main concepts. So earlier, what was happening was the payment aggregators, they were providing a technology platform as well, and they were handling finance as well, working as a fintech player. And they were called payment aggregators. There's this another concept wherein people do not handle funds because you need separate resources. So RBI kind of recognized it, and in these guidelines they created a difference between payment aggregators and payment gateways. So this was the classification which was created. Payment gateways are somebody who do not handle funds. They are purely technology provider. But where you are giving technology plus you are handling funds, there you are called the payment aggregators. So that concept was provided, wherein they introduced some additional security requirements. And most important, now there's an authorization that is required from RBI to run a payment aggregation business. Thresholds are introduced to enter the market or to apply for the authorization. And how it impacts, I'm sure, amongst the audience that there'll be people working in organizations wherein you are not into hardcore payments, but you are running a fintech platform, or, you are dependent upon a payment aggregators or fintech platform for collection of funds, etc. How does it impact them? Now, broadly, nothing changes as such, except for the data part of it. As far as settlement timelines, etc., are concerned, that is something which remains as is, which can be contractually agreed between the parties. I think that is something which RBI has kind of relaxed. But when it comes to the data, now all of us, we make transactions, we store the card details for our convenience on a platform. Till now, these card details could be stored by any merchant. So let's say I'm making a transaction on, let's say, this any e-com website. When I visit next, my card details are popped up. Till now, what was happening was these entities were storing the card details at their end. They were obtaining a PCI DSS certification, which is a mandate to collect the card details. If you are collecting or storing the card details, you need to be mandatorily be PCI DSS certified. Now, with the aggregation guidelines, they have restricted, RBI has restricted merchants storing the card details of the user. Simultaneously, what they have also restricted, even the payment aggregators, RBI's own licensed entity who will go in for license are also restricted to store the card details. So it's only, the card schemes, banks who are kind of permitted to store the card details at their end. So this is one of, I would say, one of the major things which is going to impact a lot of fintech players, a lot of e-com entities. Plus, till now there were no restrictions around what transaction data is to be shared back with the merchants. Now they have restricted that as well. So the regulations say that share as much is required for the purpose of tracking that transaction, nothing beyond it. So the information which was being accessed is kind of limited. Since while we are talking about the data, I'll briefly touch upon the localization requirements, and I think, to my understanding, I think this is linked. So in 2018, RBI came up with a circular, and that happened like suddenly, like once they woke up out of blue moon, and they said payments data, as far as payments data is concerned, it was not defined. It was as vague as any payments data is to be stored only in India. Not even a copy can be stored outside India. So they came up with these localization requirements, and players were given like couple of months to kind of implement it and get it done. All the players, if you are a domestic player, only for cross-border transactions you were allowed to store. So let's assume, there is a foreign international merchant operating in a, for example, somebody like any tech cloud giant, or kind of a Netflix or a Facebook, who have like their processing is managed by their offshore entities. The data also gets shared. So I think it was a major blow. And recently we have seen, MasterCard, RBI kind of penalized them for not storing the card, not complying with the localization requirement. So it was like a major thing for Visa and MasterCard, whose servers end-to-end everything was outside. Now they have to get everything in the market. So with the localization also, since RBI could regulate or put on this condition only to its own regulated entity, for example, banks, prepaid issuers, they could not touch the merchants, or they could not impact them. So I think by getting or incorporating this in the payment aggregation guidelines, storing the card details or minimizing the data that can be stored, I think that is the motive what the Reserve Bank is trying to achieve. Now, if they could not directly reach to the merchant through the payment aggregators, kind of they are mandating it through the payment aggregators. This was, I think, one of the most interesting things in this. Now on the payments, and other than that, as far as aggregation is concerned, there are now additional security requirements which are to be complied with, while or additional due diligence, if I can say, which is also to be conducted by a payment aggregator. Still now payment aggregators were doing whatever was required as per the banking contracts, because they were not regulated. It was through a contractual obligation. But now everything comes under a regulation. They are directly regulated. So everything, they have to check in accordance with the RBI guidelines. So I think these are the things, to my understanding, which impacts businesses around. Other than that, while aggregation is growing in this manner, so the DPSS Department of Payments and Settlement Systems in RBI is working on it. Simultaneously, the other departments, in RBI are also kind of concentrating. If we look at, the NBFC, the non-banking financial company sectors, because, along with aggregation, the fintech apps started, the development started on that end, wherein people started coming in with very innovative ideas to extend a credit, because India is an untapped market as far as credit is concerned, and there's a lot of potential. So a lot of players, they started building, using technology to reach out to people to extend credit or extend different products, like, buying now, pay later, having a credit not without a bank account, not having a credit card, those kind of products started kicking in. And RBI, as I've earlier said, they are quite active at it. They understand the market, and then come up with the regulations. So the Reserve Bank, on the development side, they have kind of revised the NBFC framework, NBFC guidelines, so that they can meet up with the tech requirements. Then on the data side, they realized that these fintech players, were kind of exploiting the data, the bureau data, which was being fetched through the bureaus as per the regulations, as per the Credit Information Act. The data could be accessed only by a NBFC, or by the specified users, and NBFC qualifies as a specified user. But NBFCs were giving access to the other players. So RBI has issued letters to NBFCs not to give access to other players, or bureau data cannot be accessed or shared with any third party. In addition to that, for NBFCs, the outsourcing guidelines are applicable, which are kind of mandates certain banks, certain mandatory compliances which you have to ensure if you are onboarding a third party vendor. So, the Reserve Bank kind of enhanced those guidelines as well, and the models of like the fintech apps. And I'm sure, now neo-banking is another concept which is picking up in the Indian market, wherein it's like a account built up on your bank account. Basically, it's like a digital bank. You need not visit a branch. You need not do anything. Through an app, everything will be done end to end. So that concept is also started picking up, and I'm sure in the next couple of years we will be seeing the guidelines on neo banking as well to be kind of issued by RBI. Um, uh, um, this is like the broad framework of the regulatory requirements or regulations and the upcoming requirements coming in on the fintech space.
Thank you. Thank you very much, Mikita. Very interesting. Obviously, for those of us who are not part of the Indian market, naturally, this sort of introduction is priceless. I think it's a good segue to our next presentation. I know we have some questions already, and I don't know, Kavita or Mikita, if you want to address them quickly, or if you prefer to just leave them for the very end. I think that they're very relevant, and we may be better served if we leave them for the end of the session when we do the Q&A round. But if you have anything to add right now, it will be a good way to just close the presentation and carry on.
When I think we'll go with your advice. Let's take it at the end of the session.
Good. Thank you, Kavita. Okay, well, then we can move forward. Again, thank you so much, Mikita. Binay Kesari, General Counsel for SETU. I leave the floor to you.
Thank you so much, Juan. I think Mikita has already covered a lot of ground, and so I don't want to retread a ground that's already been covered. But from where I observe things, which is as a fintech company that works primarily in the API and infrastructure space, where we essentially provide infrastructure to other fintech companies and to other companies that want to become fintech companies or want to incorporate fintech elements into their existing app or offering. There are two broad trends, regulatory trends that we are seeing, and I'll stitch together some of what Mikita has already covered and add a little bit as well. So the two broad trends that I want to talk about are, one, just the regulator in India, primarily the RBI, kind of opening up payments in multiple ways, and kind of finally delinking banking and payments, which is something that people have been, the fintech industry in particular has been asking for quite some time. So that's one trend, and the second trend is essentially API banking or open banking, which is essentially the ability to be able to access a regulated financial institution or an account that you hold with a financial institution from a third-party app. So these are the two broad trends that that we really see in India right now, and which are worth watching and tracking, also because they tie in with the two big pieces of fintech that exist today, which is payments and API or open banking. So on the payment side, there are a number of developments that have occurred. Mikita already talked about PPIs, which is prepaid instruments or wallets, and there have been a bunch of very recent relaxations or superpowers that have been added to PPIs recently. There were three big things that happened. One, PPIs have been mandated to become interoperable. So in India so far, just like in most countries, PPIs have been effectively their own walled gardens. Even if you could move money in and out of them between, you say, a bank account and your wallet, you couldn't move money between different wallets. And of course, this this is something that that obviously is to the advantage of large wallet players. But what has happened in India recently is that, and by recently I mean in the last 3 years or so, is that wallets have become less important because of UPI. Right? And we'll get to UPI in a few minutes. But as wallets have become less important, and the volume of transactions passing through them has reduced, uh, the overall value of wallets themselves seems to have, as a product, seems to have dropped. So what the RBI has done recently is, one, it's mandated that they become interoperable. So in the future, in the near future, you will be able to move you'll be able to move your wallet balance from, say, your Paytm wallet to your PhonePe wallet or your Amazon Pay wallet. All of these will have to become completely interoperable, and this is a mandate, so it's not optional. Number two, the limit, the balance limit has been increased from 1 lakh rupees, 100,000 rupees, to 2 lakh rupees, 200,000 rupees. And the third superpower that's been opened up is allowing cash withdrawal from ATMs. So when you put these three together, on the consumer side, a wallet very quickly starts resembling a bank account, and starts becoming much more valuable and much more viable as a payment instrument, and also as a store of, as an actual store of value. So this is one big thing that has happened on the payment side, and I think we will start seeing the effect of this in terms of consumer facing products and so on over the next 6 months to 1 year. The industry is still digesting all of this, implementing things, waiting for machinery to grind into action, for people to actually make interoperability happen and so on. But this is really big, because here you basically have an entity, a fintech, which has a PPI license, which is a relatively lightweight kind of license. It's much easier to get than a full-fledged banking license, for example. And yet they will be able to offer a product to consumers that replicates some important elements of the banking experience for many consumers. Right? It's not exactly the same, but it's still much closer to a savings account than a wallet was able to achieve in the past. So that's one. The second interesting thing that has happened is that, and this is very technical and really doesn't matter to consumers directly, but is very interesting for people in the industry. So in India, we have a number of different payment rails, and India is quite interesting that way because, over the years, both the Reserve Bank, which performs many functions in India, it's a payments regulator, it's a banking regulator, it's also our central bank. And it also runs a bunch of payment systems. So the RBI runs two important payment systems, NEFT and RTGS. And there are, of course, a whole bunch of other payment systems, retail and other types of payment systems that are run by NPCI, which is a completely separate entity. But the RBI still has control of NEFT and RTGS rails, which are still extremely important, especially when it comes to corporate payments, bulk payments, and so on, and high value payments. So the RBI recently said that they would open up direct access to NEFT and RTGS rails to any payment system operator in India. Now, this is really big because until this happened, and of course, it's still not been operationalized. I'm guessing it will be operationalized in the coming months. But until this point in our history, in order to be a payments player, to run a payments product, you still needed to work with a bank. You did not have, even as a licensed entity, whether you were running a UPI app or you were a PPI, you had a wallet license, you still needed to have some kind of an underlying bank account, right? And use that bank's payments machinery, their payments infrastructure, to move money. Now, once the RBI opens up NEFT and RTGS access directly to other payment system operators, such as PPI holders and maybe even payment aggregators, which again Nikita talked about, this means that at least these entities, which already hold RBI licenses, will potentially be able to kind of de-link at least part of their payments experience from existing bank infrastructure, which is a very key step towards delinking banking and payments. So, banking and payments are, they seem intertwined, but they're essentially very different problems, right? Banking is about the buying and selling of money. Payments is about moving bits, right? We all know that payments is really more about moving data than actually moving money, right? It's more of a technical challenge rather than a challenge of managing money, right? And therefore the skill set required to handle both are fairly different. And in many jurisdictions we have seen that banking and payments are separated to some extent. It is possible to be a full complete payments player without having to rely on banking infra in order to run your business. In India, that hasn't been possible so far, but it will become possible quite soon. This is the other big, development in payments. And the third, which consists of basically two, kind of in my head at least, interrelated changes, is the RBI opened up, a new type of license. They said that they wanted to set up a new NPCI-like entity, which they called the New Umbrella Entity, or NUE, which is a new entity which they expect to be a consortium of a minimum of 3 players, right? Because the maximum shareholding of a single entity in an NUE is 40%, so it will have to consist of a minimum of 3 players. So they basically want to ensure that that NPCI has competition and that it does not become the default entity that operates all of India's retail payment systems. So, the applications, of course, have closed. And so the RBI at this point must be scrutinizing applications. And everyone expects that in the coming months, we will hear, who has emerged successful. There are about 4 to 5 applicants, as far as I'm aware. So if you put all of these 3 developments together, right, and there are some other developments related to UPI and a market cap on UPI, where no one player is allowed to have more than 30% market share and all of that. If you put all of this together, the broad trend that you see is that the RBI wants to make sure that, one, there is a multiplicity of payment systems in India. They don't want a concentration risk. They see a concentration risk emerging, and they want to ensure that that doesn't result in consumer harm or systemic risk building up. And 2, they want to, I think, try to ensure that payments is slowly, separated from its very close connection right now to banking, to ensure that payments can be an industry in and of itself, without having to rely on banking infrastructure. So these are 2 very interesting broad trends. And I think it also has a lot of, it obviously has huge business implications, because this means that, payments right now in India faces a bunch of, business challenges like, zero MDR on UPI and, other regulations, because of which it's challenging to actually make money off of payments. But these developments at least give me confidence that while these short and medium term challenges will continue and will not vanish overnight, the fact is that this is a market where you can build interesting and new payments products, right? I don't want to go over time, but very quickly on API banking, I think that in India, India again is quite unique in the way we're approaching API banking and open banking. UPI it has been a huge success, and I think I will assume that everyone knows what UPI is, and the fact that it is now basically the biggest retail payments system by certain metrics, at least in India, and it has already eclipsed the card networks and so on. So Indians love UPI. It's working really well. And if you really think about it, UPI is actually a great example of API banking, because what UPI lets you do is it lets you perform two types of operations on your bank account, on your underlying bank account, through a third-party app, which is basically what API banking or open banking is. So it is essentially a subset of full-fledged API banking, and a huge success and a kind of great confidence booster that open banking or API banking can really add value to consumers and to the market overall. It's really the standardized APIs that UPI, that underlie UPI, that make it possible for you to use a Google Pay or a Phone Pay or even a Paytm to interact with your regulated bank account, with any bank account that you hold in India, right? And so that's one huge kind of confidence booster. People don't necessarily talk about it as API banking, but that is what it is. Right? The other thing that's happening is neobanking. Neobanking means many different things in different countries. In India right now, at this point in time, because of the way, because of how difficult it is to get a full-fledged banking license in India, if you haven't already been in financial services for many years and so on, the approach that most neobanks have taken is to not become a challenger bank, like a Revolut, say in the UK. What they have chosen to do instead is to partner very closely with existing banks, get them to open up their infra, help them build an API layer if required, a robust API layer, and be able to interact, allow consumers to interact with that underlying bank account, right, which is with a traditional bank which has existed for many years, through a new interface. So neobanking in India is essentially that today, right? It is the ability to interact with an existing bank account, right, or a traditional bank account through a new interface. Now this is very exciting in many ways, because this kind of this disaggregation is in many ways like a very interesting trend, because it lets different people specialize in different things. Banks are good at managing money, at managing security and so on. And that's good, and they need to have a certain mindset and a certain approach. They need to be a little conservative when it comes to that, to do their job well. Whereas on the other hand, users want a fun, easy to use end user interfaces, right? And there are certain types of companies which are good at building those kinds of interfaces, right? So with API banking and neobanking in this form that India currently has, it's a good way of helping people specialize and do what they are good at, right? And build value there. Now, of course, it's early days. We don't know exactly how all of this is going to shape up. And, there are other certain companies such as Navi, which is, which is aiming to be a challenger bank, and a recent consortium of Bharat Pay and Centrum Financial Services, which also looks like it's close to getting an SFB license. So these are companies that most likely will, kind of change this. But these are two broad trends that that I think are very interesting in India right now, and will accelerate in in the coming months.
Thank you, Vinay. Again, very relevant, very interesting. I love the phrase that the UPI had eclipsed the credit card brands, and as I'm sure everyone's aware, there were some developments with the credit card brands in India this past week, and obviously data localization. We touched on that already briefly. So the disruptive nature of these developments, both regulatory and in private, in the private sector, I think are giving us a lot to think about, right? And not just for the Indian market, but globally. So again, thank you very much. I'm looking forward to see what people put on the chat in terms of questions, so we start preparing for that. And now we will ask Manjot to go ahead and give us his part of the presentation. And please, Anshad, I leave it to you.
Great. Hi guys. Thanks ACC basically, and thank you Juan and Kavita and Brendan for setting this up. I think we heard some good things from Mikita and Vinay uh, about the fintech and what's happening in the fintech world and in India especially. So coming back to so slightly moving on from fintech to crypto. So as we all know, crypto is just a virtual currency in a digital form of which uses internet based medium for trading and exchange. So so I'll not get into the details of crypto, or I think most of us know what crypto is. So cryptocurrency basically it uses a distributed ledger technology coupled with blockchain technology to start with. I think Bitcoin is the first cryptocurrency announced in the world, I think in the year 2008 by a person called as Satoshi Nakamoto. I think nobody has seen him or probably have met him till date. So would be great if someone can meet him and know who Satoshi Nakamoto is. But yeah, but it has definitely gained prominence due to the rise of the computational power in the world and the purchasing power in the world with the people. I think people would are now want to have they want, apart from moving from the money or the fintech kind of currencies of having it digital money, so they want to move into a different sphere of cryptos or bitcoins or something like this, where they can it's not just a legal tender, but it can also act as a tender to obtain certain services. In exchange of certain services, you can pay your vendors or someone with bitcoins. So how does it impact and what happened in India? Let me focus more on that, because I think most of us are here to know about what's happening in India. So as you all know, in 2018 RBI issued a circular, and as per which it prohibited all the banks and financial institutions and from dealing with any kind of transactions of cryptocurrency. But the circular was recently squashed by the Supreme Court on the grounds that it violated the fundamental rights of the people to carry on any trade or profession. But surprisingly, in the year 2014, RBI had thoughts of moving from physical money to digital money. When it thought about it, I think it moved. It definitely approached people who were in the market dealing with crypto to know more about blockchain technology. I think there is some study from the RBI also to know about what blockchain technology offers and how they can implement to go for a paperless economy. But ultimately, I think I don't know how far it has taken off, or is it still under discussion? But why does the question comes here is why does RBI opposes cryptocurrency, and what are the effects of cryptocurrency on an Indian economy? So because there are certain we need to accept that there are certain uncertainties with respect to a Bitcoin or a cryptocurrency in India. For example, the actual value of a Bitcoin or any other cryptocurrency is unknown. So it cannot be ascertained that a specific amount of rupees or any other currency in true value of cryptocurrency. So as a long-term relative value of cryptocurrencies is unknown, and it is not guided by the differentials like purchasing power that controls fiat currency. So for each transaction in a blockchain contains only electronic addresses. You don't know the identity and not the identity of the person who is involved in the transaction. So these are the kind of threats or probably the fear which the RBI has in their mind. I think once this veil is taken off, veil of anonymity is taken off, probably RBI would want to go ahead with this. Good if it goes ahead. We can disrupt the market, and there's something for everyone to learn and choose for apart from the currency. So what, moving on from there, I think we need to focus on what are the steps the globally people are taking and what are the steps India is taking. So I think we have seen that different countries have adopted different steps to deal with cryptocurrencies. Now we know that China has put a ban on private digital currencies like Bitcoin, but however, countries like Japan, Australia, Switzerland, Thailand, Canada, there's a list of them who have accepted cryptocurrency as a legitimate payment method. So these countries have decided to move ahead with regulatory mechanisms in place of complete so as to reduce the chances of misutilization of virtual currencies. So what does this offer to India, and what does this message, what is the message which we take for India is, I think it's good if we can regulate it, if we can come out with some kind of a regulation. I think India has also taken steps to deal with crypto. I mean, if we go back to 2017, there were interministerial committee which was formed by the government, in order to examine the future of cryptocurrencies. The committee submitted its reports in 2019, where it suggested a ban on crypto. But however, the same committee recommended that the Economic Affairs Department to adopt adequate measures to facilitate the use of the crypto and to study the blockchain technology. While you can't accept part of the technology which comprises of crypto and just ignore crypto. So blockchain technology and crypto go hand in hand, right? So you just can't take what is favorable for you and leave the rest. So I think we definitely have a bright future with crypto, and I think this is something we always can't keep ignoring. I hope the Indian government or the RBI or the concerned regulator comes up with some regulations in the near future, which can make cryptocurrency as a legitimate payment method. So coming to the conclusion part, I don't want to take too much of your time. Currently, what's happening is there are no regulations surrounding crypto. I think this was the same space or same stage where fintech companies were, I think 5 years back. If I remember or recollect properly, 2015-16, when I joined Razorpay, there were absolutely no regulations surrounding fintech. Nobody ever heard about what a payment instrument is, or payment gateway is. So when you had asked someone, or if you had told someone that I'll make a payment through a mobile app, I think people would have laughed at you and me. So nobody would have accepted it, right? So today, I think none of us even put our hand into the pocket to draw our wallet out to make payments. I think most of it we do on mobile. Even starting from your the kirana stores to the biggest of the stores you go purchasing, I think it's everything on mobile, and that is the revolution which has happened over the last 5 years. So we hope same kind of revolution will we get to witness with respect to crypto and currency. I think in a recent technological revolution that has numerous benefits, I think the decentralized system using the blockchain technology is a basis of such currencies, which will prove to be beneficial for the economies, not just in India, but across the world. Because cryptocurrency is not free from lacunae, but with efficient and proper regulatory mechanism in place, I think we can deliver a plethora of benefits by reduction of corruption, elimination of middlemen, faster service delivery, and most of all the privacy. Because I think these are the few challenges. There are challenges and there are positive sides of crypto as well. I think somewhere adopting a middle path with proper regulatory measure and quality monitoring system will prove to be beneficial for India, and will definitely help India to strengthen its position in the global tech arena. So I would want to conclude here on crypto and Bitcoin, and would be happy to take any questions if there is.
Thank you very much, Manjunath. Crypto is obviously the next step in disrupting the fintech market and the whole financial systems. I think I'm part of a lot of colleagues who are looking forward to see what happens next, not just on a market by market basis, but at a global level, right? And how fintechs are going to jump ahead of the regulators and try to do the best we can to protect the consumers, to protect the market, and obviously to carry on bringing value to our customers. So again, thank you very much. We have a few questions, and I can go ahead and start going through them. I have taken them in the order that they arrived, so I gathered that they're more geared towards each one of the presenters, but I will really like it if you go ahead and answer as you see fit. If one of the answers is something that you think you can supplement, please feel free to do so. But I would like to start, if we go back to Mikita. Mikita, the first answer that came through the chat from Smita says, since there is no privacy regulation in India, what are the fintech companies doing to ensure that the consumer personal sensitive data in particular is protected?
So I think that's one of the most important question. The moment we talk about fintech, and as Vinay said, whether it is payments, fintech, everything is running on data. The numbers, how a user is behaving, what they will click on, how will they react, it's all about it. As far as India is concerned, on date, we do not have any privacy regulation. We have security practices rules, which are also, I would say, the rules do not have teeth in terms of getting those rules implemented, while, there are few requirements, but, the provisions under the law are so diluted that, no action can be taken. So under the Security Practices Act. Having said that, while across the globe we are seeing the GDPR, the General Data Protection Regulations came in EU, all the countries, including India, have come up with a full-fledged privacy legislation. So it's called the Personal Data Protection Bill 2019, which is currently before the Indian Parliament. As per the last update I have is it was before the Joint Parliamentary Committee, which I think took 2 to 3 years to kind of review it. Now I think their timeline has also expired, and Parliament wants it to be presented. So it may be soon maybe tabled in the Parliament, and it will be a full-fledged law. So this is the privacy legislation. In addition to that, I would also like to add, in around 2017, some developments were happening around Aadhaar, requirements, wherein the Supreme Court of India, they mandated or they kind of have given the status of a fundamental right to privacy. Until then, right to privacy was not one of the fundamental rights we have under the Indian Constitution. So it was given the status of a fundamental right, and since then the development have started happening. Answer to the question is, on date, the law is weak, but yes, we are expecting a full-fledged privacy legislation, and it will be interesting for the Indian market because from an unregulated environment wherein we had nothing, we are going to get into a fully highly regulated, unlike other countries wherein they had something at hand and then they have gotten a privacy legislation. So we'll soon have it. In addition, even also taken charge of it. They have also started understanding it. In one of the I was reading about WhatsApp, the privacy issue about WhatsApp, wherein court very categorically said, why the option opting out was given to the user, because the user is a data sovereign, the data belongs to the user. So those kind of developments we can still see without a legislation. I hope that answers the query.
I believe it does, at least for me, for sure. Please, if any of the participants wants to also expand on one of the questions or follow up, feel free to unmute yourself and join the conversation. Yes, Manjunath, tell us.
Yeah, I think there's one question regarding of the digital currency bill. And the question is about the view on cryptocurrency and regulation of the digital currency bill of 2021. Well, yes, we all know that the government wanted to introduce that bill and to ban any kind of private cryptocurrencies and lay down a regulatory framework for launch of an official digital currency of its own. I think RBI was very close in introducing its own digital currency, but unfortunately, the bill was upheld, and it was the government is still under discussion on it, and we look forward for it. I think banning cryptocurrency is not the right way, according to me, because we need to regulate this and see how we can promote, because this is something economy disruptor for the country for sure. While we want to be on the world stage with respect to technology, we claim that we are technologically very advanced. Now we just can't step back and say, okay, so this is something which we will not do, because you have other players in the market, other players in the world promoting it and accepting it. I don't say it should not be at the cost of it should not be hurting the public at large or at the cost of the nation. But yes, you can always regulate it, and we can have a good framework which can lay down the rules by which we can play, and we can definitely move forward in dealing with crypto. And like you all, I also look forward for a positive framework and guidelines from the government.
Thanks, Manjunath, for that enlightenment. I think, you are, already there, and you probably have to log out now. So really, thank you for, all your efforts. It was really, an eye-opener, at least for most of us who are not in the fintech industry. I think there are a couple of other questions as well. Probably, we will email them to you so that, you can give your responses later. But really, great efforts, and thanks for your time.
Thank you so much, Smita. Thank you all. Thank you, great. Thank you, guys.
Thank you very much, Manjunath.
Thanks, Manju. Bye.
Thank you. Bye.
Well, he had to leave us on the hour, so we thank him for his participation. There was certainly a couple more questions on crypto. I myself had one, and perhaps I'll pose it to all of the participants, see if someone can enlighten me on it. But so let's carry on as they came in. The next one also from Smita. Apart from RBI, what are the other regulations applicable to the fintech industry? Do legislations such as IBC and others have an impact on such businesses?
I'm happy to take that. So see, IBC, I don't think, well, at least as far as I'm aware, doesn't really impact fintech differently from any other industry. I don't think it has a different impact for those who are not from India or not familiar. It's the IBC is essentially our insolvency and bankruptcy framework, and I don't think that, unless there's something I'm missing, I don't think it particularly affects fintech directly. But there are, of course, other regulators that matter. We've talked largely about the RBI, but India has multiple financial sector regulators, unlike some other countries such as the UK, which has the FCA, which is a converged regulator to a large extent. India has a whole bunch of regulators. The RBI is the banking regulator, in addition to being the central bank. So it plays the role of the Bank of England as well as the FCA to some extent. But apart from that, we have SEBI, which regulates securities markets and all types of securities products. We have the IRDAI, which regulates insurance. We have the PFRDA, which regulates pension funds, and a few other smaller regulators, but these are essentially the major regulators. Mikita, please feel free to add if I've missed anything major, but these are the major regulators in India. There were a couple of other questions as well that I'm happy to take. Juan, do you think that makes sense?
Yeah, if you want to go ahead and take them directly from the chat, feel free. I really like the question that we were just addressing. That I think it's the ever looming nightmare of private counsel, right? What regulations apply? Am I missing anything? So that's very good. Mikita, if you want to add anything on that, I'm sure you have some valuable insight to give us as well. Oh.
Sorry, I think I was facing some network issue. Can you please repeat your?
Oh, no. As we were following up on Vinya's answer to which regulations apply to fintech businesses in India, besides RBI regulations, right? If you wanted to add anything.
No. I think when I covered it all, these are primarily the regulators, and especially when we are talking about fintech. Yes, it's SEBI, IRDA. I think these two regulators, along with RBI, play a very, very important role when it comes to fintech.
Good. And so, Vinya, please, if you want to go ahead and take another question that you have interest in answering, please go ahead.
Sure. So there was a question from Anant on 2FA on auto debit. So essentially, India is quite different from markets like the US and so on, where it's very difficult to implement automatic payments in India. And there are good reasons for this. There are consumer protection reasons, and there are also commercial reasons. So as you eliminate friction from payments, you also increase fraud, which is something I think that Juan, you will be very familiar with, right? So the lower the friction, the higher the chances of fraud and chargebacks and all of these other things that payments companies need to take into account and factor into their business model. Right, and if you want to cover for all of that, right, there needs to be enough of the pie that that comes to you as a payments company for you to be able to provide for all of those other eventualities, right? For you to be able to insure for that effectively. But in India, as most of us know, in payments there is the business model in payments is different from, say, in the US, where you have like a healthy percentage of a payment that goes to a payments company or a payments intermediary. India is quite different, and so the ability to actually be able to provide for the downside or the negative aspects of a frictionless or a low friction payment, right, is not there. There often isn't enough there to be able to provide for it. So that's one of the reasons why the RBI has generally been quite reluctant to open up low friction or zero friction payment methods. That's one. And two, just there is just higher chances of fraud, and there's a higher chance that a person who does not have a healthy bank balance finds it depleted because they are the victim of fraud, right? So from a customer protection point of view as well, the RBI has always been a little conservative, perhaps for good reason, in opening up transactions without a second factor of authentication and mandates and other types of payments that allow for very frictionless experiences. Now, for a while, there was a bit of confusion about what are the different ways in which you could carry out these kinds of transactions. But I think what's happened to cut a long story short, right now, if you really look at it and you want to be able to implement auto debits or largely frictionless payments. I personally see two broad ways of doing it. One is if you use the eNACH infrastructure that NPCI provides, right? And a lot of people already use it, but there is also a lot of scope for growth and for new products to be built there, because eNACH, the authorization for an eNACH, which is essentially a standing instruction, right? It's called different things in different countries, but it's essentially a standing instruction, right? It can be authorized in many different ways in India. It's starting from a paper authorization where you actually sign a piece of paper, right? You can also do it through net banking. You can do it through your debit card. You can also do it through e-sign. So there are actually multiple ways of doing it in India. And as far as I'm aware, no one's really developed a complete, like 100% perfect solution to making it very user-friendly to enable eNACH. But that is one sustainable way to do recurring payments through an auto debit. Right? Lower value payments, of course, not high value, not very high value payments necessarily. And the second way is, and this is probably what is the wave of the future, and what the policies will kind of tend towards also, is to encourage UPI auto debit. So your UPI auto pay. So UPI auto pay is possible today, like it's written into the UPI spec. But it requires banks and the other intermediaries in the UPI system to build a bunch of infrastructure and to build integrations and all of that, which is happening right now. There are many companies which are building all of this out, and it's a pretty complex process. But eventually, it will be possible to use the UPI rails to do auto pay. For many types of low to medium value types of transactions, and that's probably the most sustainable way to make this happen, right? If you want to do like subscription payments and so on, that's probably the best way to do it. And it's already possible to some extent. Like today, if you go to, for example, I mean, I know, I'm not aware of who all have enabled it, but recently I saw that on PhonePe, which I use for UPI payments, it's possible for me to set up a UPI auto pay to top up my PhonePe wallet from my bank account using UPI auto pay, which is the first, at least UPI auto pay instruction that I have issued personally. So it is operational, and I think over the coming months and years, we'll see it becoming more popular. It'll be adopted by more merchants, more intermediaries, and more consumers as well.
Thank you very much. Yeah, as you said, certain markets like the US or other markets in the EU don't have those kind of mandates, because once you set the auto pay, right, and that's validated, it's understood that the consumer is the one authorizing each one of the subsequent transactions over time. Good.
Yeah, especially
good.
because credit cards are really popular. Penetration is very high, and the MDR on credit cards is quite high, and therefore there is, it is possible to account for fraud and to provide for it as part of your business model, fraud, chargebacks, and so on, to provide for it within your business model because the MDR is high on that type of payment instrument. In India, the whole payments industry needs to work very differently, and the products therefore will also look different.
Correct.
If I can add to it, recently, there was a development. So when it comes to merchants, I saw, there was a mention of Netflix processing recurring payments, which essentially is on cards as well, credit cards or debit cards. For that, I think the clarification, or as per the requirement, it is not restricted. RBI has now imposed a cap of 5,000 as the maximum amount for which a recurring payment can be registered. What they have now prescribed is a procedure to be followed, or certain compliances to be met by the issuing bank to offer recurring payments. So while we are working on a UPI and eNACH auto debit facilities, cards is also something which is not restricted. It is just a change in infra that is something which is asked by RBI, and a timeline is prescribed for players to meet the same.
Thank you. Other than payments, there are other verticals under fintech, which may have other regulators coming into play along with RBI, such as insurance aggregation and online insurance broking, right? The RDA, peer-to-peer lending, online mutual funds, and FTS and crypto, etc. And this comes from Amol to everyone. Thank you for sharing that. Obviously, it's part of the question we had before, right? Which other regulations and regulators apply to fintech. So thank you, Amol, for your participation. I'm interested in, given the current scenario, right? What is the future of fintech? For example, this anti-China investor sentiment, cybersecurity, which we're just discussing, regulatory approach. We've talked about the changes that have been happening, the reaction of the regulators, and we've touched briefly on the future of fintech. And we have about 15 minutes left. I think it's worth it taking some time to have your guys's views on where we're going from here, and also if anyone from the attendees feels like sharing, I will also be very happy to give you some time there out of what we have remaining. I don't know, Mikita, do you wanna share with us a little bit of what's your view on the outlook of fintech based on what we've been discussing?
Yes, I think other regulators impacting fintech, definitely yes. I think I don't have much background of the regulations, but okay. So how I look at it is whatever a fintech player is doing, there's an IRDA or there is a SEBI. The flow of the regulator. It's like the way I see a Reserve Bank of India working in, they see a product coming in, reacting to it, having a regulation around it. So is the so is the case with the SEBI or with the IRDA, wherein we see the development happening in and regulators working. For example, one of the regulation which I see, which applies.
Hi, sorry, Mikita. I think we're interested to know the future of fintech industry, right? That's what Juan was hoping, that you would cover. Yeah, thank you.
Sorry, thank you, Smita, for correcting me. Yeah, the future of fintech industry, I think it is great. Looking at the Indian market, the kind of market to be tapped, as I mentioned earlier, it's like an untapped market, especially when it comes to the small and medium-sized merchants. So when it comes to fintech, we have a huge market or an opportunity for the fintech players to come and explore. And looking at the regulatory framework also, the market is not that restrictive. While regulations are coming in, but so far our experience is, your regulator also understands, whichever the regulator is, they understand. Regulators are kind of working with the fintech players. They are also growing and learning with the fintech players to understand or kind of implement the regulations. So I think there's a lot of scope for fintech to grow, and we can see a lot of new startups coming in. We've seen Revolut, Tide, like n number of fintech companies heavily investing in India.
So that's the point that I was hoping that, you or Vinay would cover actually, Mikita, because I think fintech right now is, it grew from a small industry to a considerably sizable industry right now. And, like you yourself said, there are lot of, startups coming by. I'm not going to touch in particular about startups like WazirX, for example, because that's a totally different ball game. But especially on the payments front and fintech, the core stuff. What do you think is going to happen? Because there are these small players, and then there are these bigger players who have established themselves. So I mean, like, are we likely to see more and more of mergers, or where is the where is all this sort of headed?
So, absolutely. Sorry, Vinay.
No, actually, please carry on. Please carry on.
No, actually, I think that's going to happen. When you are building a platform, every day, like there's a new innovation that is happening, or a new concept being introduced. It's like either you kind of build it in house, or the acquisition, and it's like somebody just comes up with the idea, reading the regulation, or if it is like I would say in a gray area. You build around something, and then kind of integrate it.
So, my perspective on this is that, so with I honestly think that in terms of fintech, we've obviously, we're just scratching the surface at this point. And, I mean, there are so many layers to this. So let me get to the bits that I think are really important. So one on payments, which is kind of the beachhead of fintech, right, in many markets, including India, because that's where we started to see the innovation happen like quite early. I'd say that fintech really began in payments 10-12 years ago, when you had the first payment gateways and so on. Companies like BillDesk were the first big fintechs in India, right? And payments, while of course from a business point of view it gets a bit complicated because of the business model in India, and how it's different. I do think that there is a scope for a lot of innovation to happen in the coming years, especially as this opens up, because of some of the things that I outlined. Wallets becoming more interesting again. Some of the restrictions on MDR may go away slowly over coming years. As digital payments has been a success in India, right? And the reason we had zero MDR and low MDR was to try to make sure that digital payments could achieve high penetration. A lot of merchants and a lot of users start adopting it. So it's possible also that the massive downward pressure on MDR may at least partially release over the coming years. It will not go away. I think India that way is never going to be like the US market or even the European market when it comes to payments from a monetization point of view, but people will have to monetize in other ways. I think that on payments though, there is scope to build a lot of new products because the regulatory structure is changing, and just the mindset of the regulator is changing. Number one. Number two, on neobanking and just open banking and so on. I think what a lot of people are realizing, I mean, this is true of payments, it's true of lending, it will also become true of neobanking, is that unlike in and this is like a fundamental truth, I think, of this sector as opposed to some of the other tech sectors that exist, like say social media or online communications and so on. That's the world that I came from before I entered fintech. But in that space, it was to a company's benefit to stay unregulated as far as possible, to reduce your regulatory surface area as much as possible, right, for as long as possible, and to operate in those regulatory interstices, in the gaps, for as long as possible, because that's how you built the most value. In fintech, on the other hand, especially in India, but possibly in pretty much every market in the world, right, it doesn't really work that way. You have to leverage licenses and regulations strategically, and you shouldn't shy away necessarily from becoming a licensed or regulated player if you really want to capture a large slice of the pie. Now, you can see this happening with practically every fintech in India. Today, most payments, every online lending startup that 2 years ago was trying to be like a pure online lender, a pure tech company, they have all already gotten their NBFC licenses or are in the course of getting their NBFC licenses. Companies like a Bharat Pay have gone one step further and are in a quest to get a banking license, as part of a consortium and so on. So I think everyone in fintech is going to move up the regulatory stack, so to speak, because that is the way to actually capture value. You cannot capture significant value while remaining a completely while operating in a purely lightly regulated or unregulated space. So I think that is the future of fintech in India. The two will converge. I think that traditional financial services and fintech will very quickly converge and will not really remain that separate anymore.
Vinay,
And that's the trend that I see.
uh, so sorry, Vinay. This is Sunita here. Just wanted to check one thing. If you're aware, do you see any changes happening in respect of RBI has a rule saying that for every group, for every industrial group or whatever, they will not give more than one license. For example, in the Mahindra group, Mahindra Finance has a financial services license, and they have said they will not give more licenses to more companies in the group as such. So do you see anything different in reference to fintech as compared to financial services?
No, I think no. My
You
honest
think that
answer is
policy will remain or it will change?
okay. So on that, honestly, I don't know. It's
Any more moves as
at
such?
best I
Okay.
can guess. At best I can guess. I think traditionally the RBI, and I think many countries have had this, have this kind of separation where they don't want large industrial. I mean, some countries go the other way, like Japan, where banking and industrial conglomerates are directly intertwined, and they operate as a group very often. But in India, traditionally, the RBI has been very has not really been encouraging of industrial conglomerates or non-financial businesses getting into licensed financial services. They have been discouraging of that. And I don't know necessarily if that will change. Honestly, it's like a public policy question, and I haven't seen any direct indicators of whether that will change or not in the near future. But I think that I honestly don't think that fintech will be treated that differently from traditional financial services. I think there was a space, for a brief period of 3 to 5 years in the in the latter
Lockdown,
half of
yeah.
the last decade, where there was a space to kind of do a lot of new things without necessarily being directly under RBI scrutiny or scrutiny of another financial regulator. That space has already massively shrunk, and it will continue shrinking, I think. And whether that's a good or a bad thing is a separate question. But that is what is happening. Like today, if you look
Sorry,
at
Vinay, I think in the interest of time, we need to wind up as well. So sorry to cut you short, but I think one, do you want to just, take over and, any couple of closing remarks or anything, please go ahead. Sorry, Vinay, and
Of
thanks.
course.
no problem.
Thank you, Smita. As you can see, Smita is much more severe with the use of time that I am. I suffer of curiosity and could listen to you guys for much longer. But yeah, in the interest of time, we're running close to our closing time. And again, I thank you all. Vinya, this is really interesting, right? To what degree we see convergence of fintech and regulatory licenses, right? To what degree we see or will see in the future a less reactive set of regulations, right? More future-proof relationship between regulators and the industry. And also you mentioned about capturing value, right? By having the licenses and the like. I believe that there's also the matter of bringing value to our customers, right? When you're a licensed fintech and you are closer to the regulatory bodies and the like, you can provide more value to the customers. It's very interesting. Thank you. So, in the interest of time, again, I want to thank everyone. I want to thank the ACC and to the India chapter. Everyone who's attended. We lost some people throughout the meeting, but most of you remain, and I really appreciate that. Thank you for sharing your questions. Thank you for sharing your knowledge, both of you still presenting and everyone who's joining the chat and participated. Kavita, I would like you, as the president of the India chapter, to give some final remarks. On my side, again, thank you for allowing me the opportunity to moderate. Kavita.
Thanks, Yuan, and thanks, Vinay, Nikita, Manjunath, for making the session so interesting and informative. I think everybody were glued. I would request everyone to please switch on their video for a quick snap. So, Yuan, this is our team that we regularly meet, usually, once in a quarter, and now we're meeting virtually. I think a meeting of 6 months due to the pandemic. But I'm glad that everybody is so enthusiastic and have so much of enthusiasm to make it to attend this meeting. Vinay, Anant, Ankit, Nirupam, if you can all switch on your video, we can have a quick screenshot, I would say, as a memorable thing. Okay, I think Nirupam, Ankit, oh, we lost, yeah, Samir is there. And, okay, I think a lot of members have gone left. Smitha, yes.
Smitha, you don't have privacy. You need to exclude that.
Yeah. Sorry about that.
The expert.
And Kavita, before we sort of wind up, I just wanted to also thank Juan for moderating this session. It was smooth, and I don't know what to say. I mean, there were flaws as such, right? I mean, it was like really the content was good, and then the way he sort of helped everyone sail through. I think that was really great, and of course, thanks to the participants as well. So without fail, I think they are the ones who actually keep us going. So thanks to you all.
Thank you, really.
Thanks.
So Kavita, you had the photo shoot. You had the photo shot.
So I will take a screenshot. Okay, so smile. Here it goes. Yes, I'm done. Over to you, Brandon.
Thank you all, guys. Thank you very much.
Thanks. Everyone, yeah, thank you so much. I'm sorry, go ahead, Rajesh.
No, I was just saying thanks. Thanks for a wonderful session. It's been a much awaited one, which is a fintech, which is a growing industry. It's a considerable size, considerable new technologies which are growing, and there's simultaneously a lot of other concerns on security, privacy. I think this is a topic which probably at least once in 6 months we need to bring some stalwarts who are into the industry and probably have a much more wider discussion. And this industry is going to grow. So I think it's going to be another set of a series of conversation. I think we need to plan some series on this. Thanks again, Kavita, Smitha, for this wonderful session, and thanks to all the speakers, Vinay, Nikita, Manju. It was really great, and I'm very interested to glued onto it. Thank you.
Brendan, go ahead and close, please.
Yeah, just to echo what everyone said, really great session. I will be sure to share the recording link with all the attendees, just so you can view it, share it with your in-house teams. But really, on behalf of ACC, I just want to thank our presenters. Juan, as running the show, great job, and it was really great, everyone. So I hope you all have a wonderful evening. Until next time, you'll be hearing from me about our next session, whether it's virtual or in person, and we look forward to seeing you then.
Great.
Thank you very much, everyone.
Thank you all. Thank you. Bye.
Goodbye.
Thank you. Bye.
See you. Bye-bye.
Thank you, guys. Bye.